Hi everyone, welcome to Thursday. It's Thursday, the 8th of January. It's still absolutely manky here in London. If you don't know what manky means, look it up. It's it's just the weather's awful. It's warmed up a bit, but it's grey, it's damp, it's horrible. It's one of the reasons I lived in Cyprus for 20 years. But anyway, those of you, if you're watching in Cyprus, I hope you're having a lovely warm day. It's horrible here today. Major news today is going to be the jobs numbers. Obviously, everybody's waiting for tomorrow, but we had the ADP yesterday, didn't we? That missed by 8,000, and then we've got the weekly claims in about 10 minutes, and then we've got obviously non-farm payrolls tomorrow. Interesting, as we've been saying all week, the non-farm payroll. I was looking at the Bloomberg survey this morning, and that's actually been upgraded now to 70,000. So consensus is around about 70,000 on the Bloomberg. The Bloomberg. What's the word I'm looking for? The Bloomberg survey, you fool, survey. And the Reuters one was still. I haven't actually checked it this morning. I haven't said that because I got sidetracked. Let's have a quick look. What Forex Factory is showing us for compliance tomorrow. 66. So that's ticked up again. Remember, we started the week at 58, so we're at 66 for consensus following the ADP yesterday. We'll have a look what claims looks like in a minute. Obviously, Jolts here, 7.15 million. I'd left you before that came out. This is a 14-month low for the Jolts. So again, a bit of a hiccup, but much stronger than I expected. Services PMI data from the ISM yesterday. So if we look at this little chart here, we're just going back to yesterday's data, but it was mixed data yesterday. So a really strong. Let's take the forecast up again. A really strong reading for services, best one for a while here. So best one since November last year. So best one in 12 months. Whereas this is what the market's focused on. The JOLTS number, focusing on jobs, was the worst one. Again, if we take the forecast off, this is the worst one in 14 months. So we can see here 7.1 million, quite a significant. Obviously, the downtrend's going, weakness in the jobs market. That's been talked about, the cracking, the gradual change. So see what, obviously the key data tomorrow, but see what unemployment claims look like today. A significant last week, significant 200,000 is a really, really weak number. So that might be just an outlier. Really strong number, not a weak number. So, back to January 2025, we were last down here on the weekly claims numbers. So have a look what that looks like. Obviously, there's this seasonality, the churn of the end of the year, the beginning of the year when it comes to the weekly numbers, seasonal staff being laid off and all that sort of stuff, and retailers coming under pressure in these first couple of weeks of January, and then we start to have the earnings numbers coming in as well. So let's just get rid of the calendar there. We don't want to advertising competitors, but there we go. Any comments? Anybody's here? Let's have a look. Anything you want to have a look at, let me know. This is the 4-hour chart. You can see here for Bitcoin continues to decline from that rally we saw earlier in the week when it took us to the 94,000 level. The 95,000 is a big resistance to the upside. We've been down ever since here on the 4-hour chart. We're down again today, if I remember rightly. When I looked earlier, there we are. So continuing to decline today and moving lower yesterday, moving lower again today. So 98 under 90,000 at the moment. We're pivoting around that this morning. We're trading around 90,000 on Bitcoin, leading crypto. Oil continues to be in focus most politically, but the move down we saw here on the 70 on the derivatives took us to 55.78. Was tested again yesterday. We've rallied off that a tad, and we're at 50, still under 57 and way under 58. So the downtrend is still very much in place on the oil market. We got to the 4-hour chart, it's in a big downtrend, and we bounced a bit up. So 57 becomes the key line in the sand on the short-term basis if you're trading oil, but really the move is to the downside. Forex dollar remains really on bid. If we look at the dollar crosses start off, we'll come back to the euro for the data in 5 minutes, but let's start over in Asia for a change, because that's where the market's been active and quiet. So the yen, if we go to the hourly chart for today, the yen continues to pivot sideways, or dollar yen continues to pivot sideways. There's pros and cons on both sides of this trade. So trading the range on the short term basis, you can see the lows are getting a tad higher so far this week. The highs are getting a tad higher as well, but we are struggling to get back to 157 so far this week, or so far in the last couple of days, I should say. This is the hourly chart. If we look at the daily chart, as we said yesterday, we remain sort of consolidating at highs, but the range on the dollar yen has compressed quite significantly. Obviously, lots of market. This is the first, as I say, the first full trading week of the new year. Key data tomorrow. We've had some key data already. It's been quite mixed. We had that moving up and then the move down in the stock markets yesterday. So 157 remains a line in the sand for dollar yen on these higher time frames. Dollar CAD 138.50 at the moment. Dollar continue its recovery against the loonie into a key resistance area yesterday, as we talked about as we were chatting yesterday as well. So 138.50 remains a sticking point, although 2-3 strong positive days here for the dollar against the loonie. So the dollar's definitely up here against the commodity currency. So up against the CAD, which chipped to the Aussie, reversed quite significantly over the last 2 days against the Aussie as well. Remember, the Aussie inflation's took us to 67, 66 earlier in the overnight yesterday. We were down into close and then down again today. So if we look at the shorter time frames on the Aussie, the trend is very much to the downside. We're in this lower half of the Bollinger Band, sticking to the outside of the Bollinger Band, coming in a wee bit now on the hour as we've gone into under the key .67. So we're pivoting. Or we've ran in and ran through .67, but we can't get back to it. So that's been the key noise of the European session for the Aussie this month. So Aussie remains weak, and the final commodity currency, the Kiwi, similar pattern. Obviously, 58 we gave way yesterday, or day before yesterday, wasn't it? And we're moving lower and into 57.50, the next key sort of round number area, 57.50. Again, like the Aussie, we've been under it, and now we're pivoting back to it. We're just about over 57.50 here on the Kiwi. If you look at the high, the bigger resistance, there's that 58 we talked about, and these the 57 and the 57.20 and the 57 zone down here. So again, trending low. So dollar up against the commodity currencies. Euro, which will actually just do cable because we took a trade on this. I'll talk more about this in a minute. Interestingly, it's an end of day trigger, but because I hadn't taken many trades, I brought my own rules earlier today, but we'll talk about that in a minute after the news is broken out. But anyway, we are long, or I am long. This is a copy from my trading platform. I've put it on the our trade locker platform here. So I'm long. I'm short pound. Not long. I'm short sterling. I'm short sterling, so I'm short pound against the dollar, and I'm long euro against the pound. So we're two correlated trades, so twice the exposure if it goes the wrong way around. I think we're all right. We'll talk about that, I say, more in a minute when the data has come through. So again, sterling, like the other currencies, with the stronger dollar, is holding its bid. We're at 134.46 at the moment, under the key 134.57 line, which I'd put in for some reason. I don't know why, but it's usually there for a reason. But anyway, I say target for this is to take it under 134 if it continues. The dollar continues, so it's bid against sterling. But anyway, we'll come back to that in a minute. So euro, let's just come back to the euro again. So euro not as an exaggerated decline as the others. So holding at 116.75. And let's just go into the 5-minute time frame to see how that reacts to the jobs news. So here on this on this. No, you might have been stopped out if you'd had just not. No, you'd already stop loss there. That would have gone long. I'm just saying that's how the scalpers would be have been trading this morning, a year or so. Last long would have been actually you would have got in on that one there. Stop loss around this cluster here, around this low. So you might have been stopped out if you got your stop loss around these bottoms, which to be honest, I probably would have had it there. Oh no, it's 116.70, so I'd have had it a little bit lower. I might have even gone, I probably wouldn't have gone as low as that wick, to be honest. I'd have had it around about the mid of that wick. So there, so I would still be in. It's easy to say that afterwards, isn't it? Kidding yourself. But yeah, I would have put it below the round number 1670. See where that, so we'd have had it sort of there, the low, around about there. Sort of half. Again, the spread might have took us out, but anyway, let's treat it consciously. So again, against us, got to target 1, and target 2 is looking like it's not happening because we've the data is breaking, I guess, as we speak, and we moved down from our spike up. We're under our entry now, and let's have a look what that data looks like on the jobs front. So today's data, unemployment claims is coming a little bit better than expected again. 208,000. Let me just share the number with you. It's coming better than expected. 208,000 for the initial claims. The continuing claims have been proving better as well. So 200,000 is that's been upgraded from 199,000, but that's significantly a strong number, and not as bad as many were expecting to tick up to 215,000. It's 208,000, so that bodes relatively well. If you cluster the last 4 weeks together, obviously we've had the holiday period, so it's a bit skewed on that. But as far as the non-farm payroll data tomorrow, that's only clean. Whether we see another revision of the expectations for tomorrow, we'll see. Remember, there's lots of detail in the non-farm payroll data from the Bureau of Labour Statistics. So I was talking about yesterday, participation rate, weekly pays, the unemployment rate, the wider unemployment rate. Remember the headline 4.5%. The wider U6 measure is one I'm always interested in. So we'll have a look at all of that tomorrow. So upshot is this claims numbers. We've got the weekly one. So it's back over 200,000, but 220, 240,000 a week is a strong, it's still quite a robust jobs market. So the worry about the jobs was when this was spiking over 240, but it's been declining, and so there's this sort of, are we in equity? Are we in balance when it comes to the jobs market? Low demand, low supply. So people not claiming might be the other issue. Not looking for jobs. Those in jobs are doing okay. It's just those that are trying to find jobs, particularly the unskilled, it's finding it very, very difficult. So 208,000, better than expected. Last week was still really, really strong. I say at 200,000, and best week again as we go all the way back here to January 2025, and then beyond that, was that one at again beginning of the year's peaks. It sort of drifted back up there. So strong numbers, but again it's skewed because of the week where it's being counted. So anyway, that's the data out. Dollar has dollar's picked up. The euro long here on this 5 minute was reversed. We just got the first target and stopped out on the second target. So that's gone short. That's triggered, it hasn't touched the outside, has it? So that's gone down. So we're continuing the trend. So interesting, look what we have. We're at the low of the day. The key data of the day is out now. And we're at the low of the day for euro dollar. So dollar is continuing its run in demand at the moment. How long that continues, we shall see. Let's have a quick look at, I haven't looked at this for a while, so let's do this live. The CME group, obviously it got revised again tomorrow following the non-farm payroll. But there was more and more analysts and Wall Street banks talking about, not moving in January. That chorus has increased, and that's now gone back to 88% of a chance of nothing happening in a couple of weeks' time, week after next. So no change. There we are. Sorry, it's gone. Yeah, it's gone up. So it's a month ago, it was only a 68% chance of nothing happening. That's gone up a whole 20% from the beginning of November. Here, here to an 88% chance of no change. So there was expectations of price that might go again in January. Obviously, this was before the December meeting, but that's now looking like nothing's happening. So it's really, that confirmation's got stronger over the last couple of weeks over the Christmas period as well. March is possibly still in the frame. We're about 50-50, 57.38 or 57.40. There's a 4% of a 50 basis point cut in March, so 57. 44, 42. So yeah, March is still in the frame, but again, that's sort of got peaked up last week and gone back down again. So yeah, many are expecting 2 for next year. This year, I should say, 2026, obviously. Possibly the April and the June, and then nothing else for the rest of the year. Others are saying, well, we might be done, mightn't be anything. But the noise around, obviously, the meet at the end of April, and the new chair chairs his first meeting, the 17th of June. Maybe announcement this week about that. Maybe coinciding if the non-farm payroll is good, to gain biggest political attention about that announcement potentially. But obviously the geopolitical situation has moved on. But again, if Trump is looking to return to the economy, see what all this data this week looks like, and the announcement may be incoming. Is it going to be Kevin Walsh? Has he talked his Treasury Secretary into the position? We'll see how it all pans out, and react on the news. Don't try and predict. Obviously, it's a risky business. The old prediction market. So anyway, story for another day. Just close that down. So right, back to the market. So dollar, euro, making new day lows. The trend to the downside continues. So that hopefully has improved my short position on sterling. Indeed, it has, and even euro, pound in the money as well now. So these were trades that I took on my strategy. My strategy, remember, is the one I share with you here is an end of day strategy. I've also got obviously 5-minute short-term strategies and an hour, 4-hour, 1 hour's strategies. But interesting about the psychology of thing, I've been doing this for years and years and years. And this morning I was getting a bit twitchy because nothing triggered last night. Nothing had really triggered the night before, apart from the Aussie ones, which I didn't take, which would have been in the money. So that was obviously sitting in my subconscious. And so I've taken these trades midday or during the day, which is what this is really against, my mantra, because my system is saying, it's potential trades tonight. So where did I put it? I'll put it on the trade chat here. So this was 11:40 my time. So just before 12 o'clock GMT, I took these 2 trades, which were triggering things had set up on my end of day system, looking like this was going to go. And obviously, by the end of the day, this could all turn around. It could not be a signal. So I've jumped in early, and I'm dealing with that. You got to deal with that psychologically. The 4-hour system had actually triggered as well, so it was on the back of that really. But it really is based on the end of day system. But anyway, we're long euro pound and short cable. We are currently down for the week, aren't we? We're down 70 points, I think 76.55 points at the end of close yesterday. We've had 1 winning trade, 1, 2, 3, 4, 5 losing trades so far this week, or 4 losing trades and 1 winning trade. So we're out 76 points, but these 2 are now live, and something else might come tonight. So anyway, watch that if you're interested. I'm here to help you. It's all about following your rules, and I'm just admitting I've broke my I broke one of my own rules, even though it was correct on the 4 hour analysis. It's really an end of day strategy, so it's an end. We should have waited until the end of the day, but anyway, and the 4 hour strategy is less successful than the end of day, the two end of day strategies. But anyway, we are long, short euro, long euro pound and short cable as we go into the rest of the day. If anybody cares. Right, so where are we elsewhere? So dollars up on that strong jobs numbers, expecting perhaps strong moves tomorrow as well. So the indices, I don't know, again, if you've been watching, we had a strong start to the day yesterday, but the S&P closed down 0.34 of 1%, 24 points up, 6,920. The Nasdaq was up actually 0.16 of 1%, and the Dow was down nearly a whole 1%. So the Dow had been the best performer over the few days, and now that was the worst performer yesterday, all to do with the volatility it's kicking around. So if we just look at having gone to all-time highs as well, yes, that was the other caveat. So we start with the most important, the S&P 500, and we just go to the hourly chart. You see what a volatile day we had yesterday. So where are we? This is a big move towards the end of the London session. So this was the 6 o'clock. This was London closing yesterday, the 4 o'clock candle. So we'd been positive all day. We'd started quite positive, and the actual US session was doing okay into the London close. Then we had the big turnaround into close. So if we just look at the, actually, let me just bring up, do it visually. It's always nicer, isn't it? If I bring up FinViz, I really like FinViz. It's simple, informative. There we are. It explains it clearly, a bit more clearly. There we are. So you can see we had a relatively a poor start. We came back and then we sold off. Nasdaq, good strong start, but then sold off. S&P, strongish start, and then sold off into the second half. Once London was closed, that was the key thing. This is New York time. This, guys, so it's 4 o'clock close here. This is New York time, not the time on our chart. So you can see relatively red across the board for the S&P. Google was up, Eli Lilly was up, some of the significant movers. Amgen was also up, but we mixed day basically. So all on the news that was floor, and it was all on that jobs news that pulled us down later. So new all-time high, intraday all-time high, 6,964. So this inevitability, I use that word, of the 7,000 level coming into play. Hasn't happened yet. Oops. There we are. So let's move these down a bit. And there we are. So update on the 6th, down yesterday, and we're down again today at the moment. So the peak, like we did last time, through this all-time high, petered out after 3 days, petering out again. But there's the new all-time high, intraday all-time high on the S&P yesterday before we sold off. But upside target is still the 7,000 level. See how it all pans out. Dow, similar movement, strongly over the midline, the Bollinger Band, but an up day on Monday. It was sold off yesterday evenly, so we got a bit of a tweezer top there, and then down again today. Support the 20-day moving average, 48,500, the 50,000, another round number potentially coming into play. It's that fib extension, but nothing ever goes up or down in a straight line, as I'm sure you all are aware. And the Nasdaq, this is the Nasdaq 100. Remember, it's more struggling with the 20-day than the other two. But again, similar pattern. These recent highs are, the recent high here from the beginning of December is 25,800. The high, all-time high, from the end of November, 26,230, 240, and the fib extension of this last leg down is 25,500. So, 26,500. But at the moment, it's sideways action going into earnings season at the moment. There you go. You take your money, you pay your price. Gold is a bit lower today as well. 4435. Down day yesterday, like the stock markets. Up to start of the week, up on Tuesday. Sorry, what am I talking about? Yeah, up on Tuesday, down on Wednesday, and we're down again here on Thursday. So banging into that fib level of that last leg we did. It's a bit of a call that a leg is a bit of a stretch, but it's still in play. 61 had held yesterday, 61.8. The 50 has been tested already this morning. So the down trend for the past 2 days, we got the hourly chart is in play. There's the hourly chart from that rollover. There's 67, there's a 61, and there's 50. So lots of support yesterday. It looked like that was holding. It wasn't until overnight in the Asian session where we breached the 61 significantly with a candle that closed below it, and then we've moved down and we've tested a low, and then we've tested new lows under the 50 just in the last hour or so as dollars gained strength. So that downtrend is still very much in play. Are we going to find support here like we did yesterday? Excuse me. Coffee time. I haven't had any lunch yet today. It's 13:45 in London time, so I'm going to get some lunch in a bit. So there's our 50 fib level 4410, 4411 there, and again a bit of a sideways action since the move lower in the early European session this morning. So gold sort of buys to the downside today. That's metals. So there we go. Anybody got anything to add, or anybody want to have a look at anything? There's nobody here at the moment. That's fair enough. So let's just go back to the calendar. Tomorrow, non-farm payroll, the employment, and let's actually review the week. Let me just bring in the calendar. Just bear with me a second. If I take that one off. Apply filter might make it better. So let's bring that up. So the high impact events for the week. Hang on a minute. We want to do it for this week, don't we? It's 11th to the 17th. Apply. No, it hasn't gone. I thought it was going to go away. Never mind. That's next week, you fool. It's this week. Apply settings. There we are. That's a bit better from a demonstration point. There we are. So key week. So let's go a quick review. Manufacturing still remains miserable, 47.9 in the US. Weaker inflation out of Australia. ADP was quite a significant miss. On the flip side, we had looking forward, but then remember these are sentiment indicators, the services PMI. So that was a really strong number, 54.4. Well, not really strong, but better than expected, and still leading the globe, to be honest, at 54.4. So some evidence of Trump doesn't completely speak the ill truth. But the worry, the spike yesterday was this JOLTS opening going up to a 14-month high, and the weakness in the ADP number. Although it's better, it wasn't quite as strong as it was expected. It's not negative anymore. So that all sort of took the wind out of the early sales of the US Open. Today's data is actually better, isn't it? The claims still remain quite strong. So the dollar's still bid. As we saw, the stock markets sort of where are we? We're still 40 minutes ahead of the open, and we're sort of down on the day across the board, aren't we? Tomorrow is obviously what everyone's been waiting for, or the big announcement of where the week is going to finish, whether you're a forex trader or gold or Bitcoin or stock trader. The ADP numbers. The non-farm payroll numbers. So as I said earlier, it's the whole gamut of data that comes out: the unemployment rate, the earnings, the actual headline number, and then how that composite is broken. Remember, in manufacturing still being weak, it's still The PMIs are still suggesting weak manufacturing numbers. Government jobs continue to be trimmed by the administration. So see if this services PMI data is coinciding with the growth in services numbers. We saw that in the ADP number, the detail in there. The ADP services number, small company services numbers actually jumped up quite a bit as well last month from being negative the previous month. So see what that looks like. But as I say, the key thing as we've been watching this week is that this figure was 58 at the beginning on Monday. We're now to 66. So that's a relatively significant increase in the consensus for the number. Remember, the consensus is all the Wall Street analysts, and it's averaged out. The spread is still the same. The highest and the lowest still remain the same. So the highest is still at 155,000. So the extremes haven't moved, interestingly, but the consensus has moved up. 155,000 and a low of 25,000. So again, quite a big spread for the January number, but this is clean, is what everyone is saying. There'll be some questions over the detail, but we'll have all of that this time tomorrow, and we'll see how the markets react and where we can be making our money. Will the dollar continue to hold its bid? Will the rollover in gold we've seen in the last couple of days continue? Will the rollover in will Bitcoin continue to struggle under 90,000? We shall see all of that tomorrow. So join me for that tomorrow. In the meantime, take care, be good. I'm off to get some lunch, and then I'm off to do our weekly review video, and we'll have that with you for tomorrow. Okay, take care, everyone. Stay safe and be good. All the best. Bye-bye.